What's up, guys? It's Tyler the Tax Guy here answering the questions you've left me on TikTok in the weekly tax question roundup. This person says, I changed my major thanks to you. This is so much more fascinating. Not strictly a question, but I appreciate you. I did the same thing. So, maybe what your parents tell you to do is not the most cool thing in the world. I was taught engineering. That's what my parents do. I liked it, and then when I studied law, I found out I liked that better. So go out and explore the world. You never know what you might find. Next question. How are most people overpaying and then get refunds? Okay, so what the person is asking is, why do people pay more taxes than they owe, technically giving the government an interest-free loan, and then get that money back at the end of the year as a refund? Reasons twofold. Primarily, the reason people do it is ease of mind. Is they know that they don't owe the government anything throughout the year, and they'd rather get that fat chunk at the end than playing it down to the wire and not knowing if they are going to owe the government money at the end of the year or not. For most people, giving the government an interest-free loan for that security is worth it. But the author of the question is correct. You are giving the government an interest-free loan. So the least amount of money you can pay the government, the better if you are self-employed or a business. Next person asked me how to get an escrow account. I think let's first talk about what is an escrow account. So an escrow account is an account basically held by a third party when a person is purchasing something, typically large, like a house or something big like that. PayPal, for example, is an escrow company. The idea being that I put my money here while I'm negotiating the deal, and then once I get the house or whatever I was negotiating for, the seller gets the money. Now, if you already have a mortgage, what's called an escrow account would be, instead of having to pay your property taxes at the end of the year or your insurance premiums at the end of the year, you can open up an account at your bank called an escrow account, where along with your mortgage payment, you pay monthly your property tax premiums and your insurance premiums so that you don't have to pay that at the end of the year. And the asker asks, how do you get that? I mean, you just go down to your bank and ask them to set that up for you. All right, next question was, what is the tax code for S Corps? Well, it's actually more simple than you might think. It's subchapter S. Now, it's quite a thick section of the code. And also it's gonna reference subchapter K a lot, which is partnerships, because both S corporations and partnerships are flow-through entities. A lot of similar rules. Just for reference, so you know, C corporations are governed by subchapter C. That's right. Okay, next person says, thanks for all your educational videos. Thank you, guys. I appreciate the opportunity to give back a little here. I was just telling my friends here, my sister is a professor, so I get to be a little bit educational too. It's fun. So next question, what is a tax deduction? So we're bringing it back 101, right? Okay, so you have taxable income. A tax deduction is a reduction on that taxable income. Usually what that looks like is it's an expense in the pursuit of more income. So if you spent money trying to make more money, it most undoubtedly is a tax deduction. Now, there are other tax deductions besides that. Most of them are in the pursuit of making other money, which leads me to the next question I commonly get, which is, can you tell me all the tax deductions that I can take on a 1099 or a Schedule C? Well, I mean, I can and I can't. The reason is it could be infinite. The amount of tax deductions you can take is anything that is in the pursuit of profit that you can legitimately prove is in the pursuit of profit. What that means is it's a business or it's a hobby that you're profitable at 3 out of 5 years. Next question, is a hot dog a sandwich or a taco? That's an interesting question, because I really didn't even think about it being a taco until the person asked the question, because it is in kind of like the same shape with meat in the middle and stuff. But I would say it's a sandwich, because I think it's like an American type of food, and it's just a different shaped sandwich. It's like a panini versus a hamburger. Okay, next question. Person asks, can the IRS seize assets of theirs that are in somebody else's name? So if you're living in a house and you're driving a car, but it's in someone else's name, can the IRS seize it? The answer is no, unless they have some crazy reason, which means you're going to be in a lot more trouble than just taxes. But they can't come after somebody else for your tax liability. So they can't take somebody else's property for your tax liability. Likewise, if you live in a house and a lien notice comes to your home for the owner of the home that you live in, rest assured the IRS can't take it because your landlord owes them money. One caveat I do want to say to that is in community property states, there's 7 of them: California, Texas, Wisconsin, and 3 more. Anyways, for in states like this, the IRS can absolutely come after the debt of the husband or the wife when they're married. So be careful if you marry somebody with a lot of tax debt, or you marry somebody with a lot of assets and you have tax debt. Once you're married in a community property state, the IRS can come after the community property. Okay, next one, the person had asked, are baggies deductible as materials supplies? They're referring to this conversation we had having about section 280E of the Internal Revenue Code, which states that any income gained from illegal trafficking of drugs, no deductions or expenses will be allowed. However, the tax court has allowed certain deductions. So last time we talked, we were talking about the 2007 Champ versus Commissioner case, where the tax court did allow everything except the marijuana itself to be deducted. But the interesting thing now is in the last case in 2019, which was Harborside versus Commissioner, now the tax court is saying nothing related to marijuana is deductible at all, even in states where it is legal. So in California, there are large state deductions that you could take, but you cannot take any federal deductions for the sale of goods for marijuana or anything related. And the courts have gone as far as to say that t-shirts with the dispensary's name on it or anything like that is as far as they will not allow cost of goods sold on any of that stuff. It's never been harder to be a marijuana dealer out there. Last one, somebody says the dogs are cute. Yes, they are. Check out Gio right here. He's just adorable, right? Gio, look at the camera. Yes. So this is Giovanni. He is one of my Chihuahuas, and I'll show you my other one next. Hey guys, this is London. Hey London. She's been with me for like 11 years. She's stalwart and amazing. Thanks guys. This has been another weekly tax roundup with Tyler the Tax Guy. Remember, follow me on TikTok, like, and subscribe.